Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Ehrman.
Hello and welcome to today's podcast. Thank you very much for tuning in. I welcome you back. If you have not gotten the new book, Life Without the Bank, please do that. If you have not gotten the book, Farming Without the Bank, why? Is this your first podcast? I'll let it slide. If it's not, go to farmingwithoutthebank.com, grab it. It's even on audio. There's really no excuse not to know what's going on. However, if you're just here to listen, welcome. I will take that as well. We are going back to Nelson's book today. We have not done a Nelson book study in quite a while. So we are on page 69. You guys, I don't have my readers on. I'm going to have to put my readers on to do this because I can't see anything. Who's out there that's 40? I swear to God, you turn 40, you wake up the next day, and all of a sudden you can't see anything. It's crazy. And then it just keeps getting worse as I get older. And I'm not even old. So, gives me a reason to buy some cutesy little glasses. Page 69 of Becoming Your Own Banker. So if you have Becoming Your Own Banker and you've not read this chapter, or you've read it and you thought, okay, whatever, I urge you to go back and reread. The chapter is, but I can get a higher rate of return. I have done podcasts upon podcasts about this, I'm pretty sure. I try not to talk about rates of return, but people want to talk about rates of return. And so therefore, I am forced to do this. Well, Nelson says right away in the beginning of this chapter, we are not addressing the yield of an investment. We are discussing how you finance anything that you buy. It is always better to finance it through your banking system than out of your pocket. So he's addressing cash in this chapter. He's addressing using the bank. He's addressing an investment. Outside of this chapter, I never, in all the years that I knew Nelson and all the years I've heard him do presentations, I cannot remember the word rate of return, the words rate of return leaving his mouth, because it is not about a rate of return. And people cannot understand that. We are so brainwashed to believe that we need to be chasing a rate of return that we forget that we need to control the banking function of our life. We need to be the banker. We need to own the bank. Why do we need to own the bank? Because Nelson says, who are the characters in the play? In his example in the book, the one collecting the interest owns the policy and earns the dividend. Why? Because he owns the bank. So many people ask, but Mary Jo, what's the guaranteed rate of return in the policy? There is no set rate. For many years, I thought there was a rate. There is no set rate. It's a formula. And within that formula, the current rate is a 4% gross. Every company pays the same gross rate. But there are other factors in that formula that make up how that policy must grow to endow at age 121. That means at age 121, cash value and death benefit must equal each other. That's what that means. This is not what we're talking about. We are not trying to get an average rate of return in a policy. Nelson says there is no way that a person can get a higher rate of return by ignoring the banking process. There is a delay in time while getting the banking system established, But once it is done, it is a one-time only event. So short thinkers, right? The last podcast I did, we talked about scarcity mindset. The short-term thinkers, they are saying, well, I don't get all my money back right away. You just put your money into a 401k to lock it up till you're 59 and a half, and I don't hear you complaining about that. I'm giving you access to your money in 7 to 30 days, and you're complaining about that, and you get access to 75% of it when 100% went into an IRA or a 401k and you didn't have access to any of it without a 10% penalty? Come on. Stop holding the infinite banking concept to a different standard than what you're holding your IRAs and your 401ks. All for a rate of return. You're thinking long-term when you put that money in a 401k. We also have to think long-term when we start our banking system. Because Nelson says, in the first example, meaning in the book, he has an illustration shown, okay? In the first example, he has paid out more than the increase in cash value. So those of you who have read my book, there are illustrations in my book. We put $100,000 of premium in and we have access to 75. We have put in more than what we have accessible in cash value. Nelson says, that is because the company has still not absorbed all the cost of acquisition of the policy. This usually takes about 12 years. The company has to pay for death benefit should you pass away. They have to pay for administration fees. Yes, they pay me commission. These things all need to be absorbed. It takes 10 to 12 years. And guess what? Your policy is going to break even. What you pay as premium, what you've paid in as premium equals your cash value at about year 10, depending on how that policy is structured, depending on how much we put in. But it's not about a rate of return, people. It is not about a rate of return. Did you make money the day that you started farming? You made more than what you put in? You are constantly putting money into your business. Constantly. And many of you are breaking even, and yet you question why I'm not giving you everything right away. Think about that. You are holding the infinite banking concept to a much different standard than what the noise is telling you to believe with 401ks and IRAs. I'm not buying that. I'm not okay with that. I'm not okay with them holding my money till I'm 59 and a half, or I have to pay a 10% penalty. Or I have a 401k and I can't even take the money out unless I quit working there. And I can only borrow against X amount of it. That's all okay with everybody. But it's not okay when I give you access to 60 to 75% of your money in 7 to 30 days. Really? 7 to 10 days you have access to your money and you're questioning that process? By year 5 or 6, typically what we pay in as premium, our cash value increases by that same amount. We have 4 to 5 years of cost. And yet we're asking, what's our average rate of return? What's the rate of return we can get on that money if we're borrowing against it and buying real estate, buying cattle, putting money into things that are cash flowing? Then what's our rate of return? Are we thinking about that aspect of it? This is a question that a lot of people have. Nelson clarifies it in this chapter. So if you've read Nelson's book and you have the question about, the interest I pay to the insurance company is going back into the policy. No, that's not happening. And he clarifies that here. The interest in this example that he pays in is not really interest on the loan. It is additional premium that is equal to the amount of interest he is paying to the finance company. Okay? So when Nelson shows extra interest being paid, that's actually going in as premium. There is interest that the life insurance company charges us that goes to the insurance company. Anything above and beyond that goes into the policy as premium to increase cash value. That is what Nelson is illustrating in his book. A lot of people get that confused. I am going to end with, it is not about a rate of return. I sound like a robot. But it is not about a rate of return, my friends. It is about liquidity, control, and guarantees. Our policy is guaranteed to grow every single year by contract because at age 121, the death benefit and the cash value must equal each other. It must endow. That is contractual. The only part of our contract that is non-guaranteed is the dividend that's been paid for over 140 years. That's the only thing that's not guaranteed. While everybody else is out chasing rates of return, you are getting a guarantee. That rate of return on that guarantee is going to be different based on everybody's age and health, how much money we're putting in, all that good stuff. Don't get hung up and start tripping on pennies when you could be making dollars and you could have liquidity of the money and you could have control of the money. We have to remember we are in the banking business. We must be the banker. We want to be the character that owns the bank and the one that determines if we can or can't borrow money. That's it for this podcast. Nelson's chapter, but I can get a higher rate of return, page 69 of Becoming Your Own Banker. If you have read Farming Without the Bank and you have not read Becoming Your Own Banker, please do so. Go to farmingwithoutthebank.com, grab it. If you've not read either of them, grab them as a bundle. It's truly the best combination. Nelson's is phenomenal. I mean, that's my whole little financial Bible. His is phenomenal. But if you have not read his and you've read mine, please read his. I didn't rewrite it. His is there for a reason still. Because Lord knows I don't make money selling books. As much as y'all think I'm rich because I'm selling books. Good heavens, have you ever written a book and tried to sell one? Grab that book and read it. If you are a client, you're the banker. You now have to know what you're doing with the bank. It is a process of studying this concept. Let me know if you have questions, if you have comments, if you have concerns. I am absolutely 100% happy to answer those. Email me, maryjo@withoutthebank.com, and I will be happy to answer those. If you want to leave a review and share this with your friends, I would love that too. That's always very nice. So again, let me know if there's anything I can do. I appreciate you all for listening and for coming back and being you. Until the next time, have a good one.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.